elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground, small, hidden channel, huge value delivery. All right, guys, we're going to be talking about a technology company that specializes in the LiDAR space. Requested stock analysis. I know a lot of people have requested a lot of stock analysis through me. I have a huge list of requests. There's high demand constantly for it. But without further ado, we're going to take a look at this one, and I'll give my my 2 cents on whether I think it's a good investment or not. Not financial advice, is always just educational, entertainment purposes. One favor, all I ask: smash the thumbs up. Don't even worry about subscribing or what have you. Just smash the thumbs up, guys. That's all I want. All right. So, Aeva Technologies, ticker AEVA. All right. Trades on the NASDAQ for $25.32 a share. Market cap is $1.6 billion. All right. Price action year to date 90% up. On the 1 year, it's up 57.27%. What are they? Where are they headquartered? Or what are they doing? Where are they headquartered? So this company, actually, I think I just missed it. They're headquartered in Mountain View, California. All right. They're in the information technology sector, but their industry is electronic equipment and instruments. Makes sense. They're the ones who have these LiDAR devices that, these are sensory devices, and so forth, which they are currently putting into trucks. All right, they have a Daimler contract partnership, if you will, and these devices here, are specialized to support autonomous driving. All right, so the trucking industry is one where truck drivers is a high demand commodity of labor and time, and the business idea to replace a truck driver is very lucrative. Okay, if you can get a self-driving truck, that's huge. All right, you're going to mitigate liability. You're going to not have to worry about paying for medical insurance and salary wages towards these truck drivers and so forth. I can understand the truck drivers are saying, they're rounding up with their protesting signs, talk about they took our jobs, but it is what it is. I think that with every technological innovation, there are opportunities for better jobs to follow. Okay. And it's just up to the people within that industry that's getting disrupted to actually adapt and overcome. All right. So let's talk about their earnings. Okay, they reported earnings here on May 6th, not too long ago. They had a beat on top and bottom for EPS normalized actual. Okay, so what is the difference between EPS normalized actual versus EPS gap or EPS gap actual? All right, EPS normalized actual or non-GAAP EPS actually is non-inclusive of stock-based comp and other measures. Okay, but EPS gap is the pure organic profit that includes stock-based comp and everything. All right. So the way you have to look at it is businesses should be judged on these different measures amongst the trailing PE non-GAAP, forward PE non-GAAP, or the gap trailing or the forward gap. All right. So these 4 different measures should be, they're 4 different ones, and each company, depending on what particular stage they are at in their S-curve or the way the market sees them, should be judged in different ways. Sometimes the market judges a company based on forward gap when they should be judged on trailing gap. And maybe sometimes the actual investor like myself may disagree. So there's a delta spread in the value there. All right. But anyway, we'll do a sniff check on the valuation, in keeping of the traditions. Let's look at their cash and debt. 102.06 million in debt, 99.50 million in cash. Whenever I see more debt to cash, this is the first thing I'm going to look at. I'm going to look at their cash flow statement and I'm going to look at cash burn. All right. They burned 145 million last year and they only have 99.5 million on the balance sheet, plus another 100 million in debt. And then the second thing I'm going to look at is their profit margin, all right, which stands at 4.63%. And then I'm going to actually go back and I'm going to look at their valuation to see how many times sales that they're trading at, all right? So 71 trailing sales and 48 forward sales. All right. The spread disconnect between the trailing sales and the forward sales, the wider it is the more anticipated growth from consensus estimates, which we'll take a look at right now. And as you can see, projected 81.96% growth, 118% growth the year after. Okay. So this is how you got to think about it, all right? If there is higher growth, cash burn should go down, margins should expand, and so forth. But that doesn't necessarily mean that, that's a good deal, all right? Depending on what the valuation they're trading on and the cash burn and dilution and so forth is what the investor has to take under consideration. Looking at their financial statements, I think from what I recall, there were some actual, how do you say? See if I can find it real quick. Bear with me. Let me see here. Yeah, so there were, once upon a time, there were some issuance of preferred stock right over here. Okay. And and but they have ceased that from 2019, so not too worried about it. On the balance sheet, I did pick up cash is going down. While we go down, total debt is dramatically going up. So these are not good financials that I like to see. All right. Consensus estimates. Let's see what Wall Street has this at. A year from now, the street's got this at $24 on the average side, 18 and a half dollars on the low, and 33 on the high. Disclosure, okay? I am not a shareholder in this company. You're getting a non-biased assessment. This is my portfolio. This actual blanked out position, I assure you, is not the stock we're looking at. That's another stock. That's a hot stock pick on my Patreon, all right? So, what do I think about these price target ranges? All right. I'd have to agree with consensus estimates. I think a year from now, stock's going to be $24. All right. But let's look at their business model, the earnings call, and so forth. And what do I assess on different angles looking into how we got to see this. Okay. So, in the earnings call, they did talk about their little partnership with Daimler, but they also talked about drone segment expansion in the defense arena, that essentially their devices may potentially retrofit drones into, autonomous driving, and then that would accentuate the drone's ability to, go through different areas where there's jamming or, low radio frequencies, that would mitigate risk to where it disconnects the actual person operating the drone from the actual drone itself. I think that, this is an expansion of a whole nother total addressable market that makes me bullish for this company. And I think that margin, This total addressable market in the drone segment can be very accretive to margin expansion and create more stickiness. All right. So that's one way I look at it. I think that their earnings slide deck doesn't really do it justice towards the actual opportunity towards these drone towards the drone segment. There was a little there was a little mention on one of these shares, or I'm sorry, one of these slides right here, that's labeled the expansion of Forterra. Um, I would have liked a whole slide dedicated towards that total addressable market into the defense drone opportunity that this company is seeing or going to be foreseeing in the future. So I think investor relations could use some help with this company. Not saying that I'm trying to get the job or anything, but these things are important to actually gather a following of shareholders, all right, and to garner more interest within the market. All right. Let's take a look at some other measures. Let's go down here. If I want to take a look at ownership. And one thing I noticed is they got a more of an insider ownership than the other competitors. Yes, spoiler alert, there are several competitors that are doing lidar stuff. So this company is not, they're not in one of these segments where it's not competitive and they're the only ones that can do this. No, you got companies like lidar, Ouster, and so forth. So if you recall, and you've been following my channel for a while, I have actually picked Ouster to be the winner out of this whole segment. I did a video here September 8th, 2024, when the stock was $5.90, and I've pretty much proclaimed that Ouster is the winner in the actual segment. If you look at Ouster, what do you see? You see a serious war chest of cash on a great fortress balance sheet. Profit margins are looking like 47.69%. Sales growth is being demonstrated. Consensus estimates are probably really accurate, and they are going to deliver steady double-digit growth in the 30 plus percentile arena. I mean, and then you compare Aeva to the actual competitor, and see how much they're trading on sales. Like for sales, on trailing sales, Aeva is trading at 71 times, while Ouster is trading at, what do you know, 11 times. So, I mean, these are things you have to heavily consider, all right? So that doesn't necessarily mean it's a bad investment, though, okay? What do I got for gross margin just off the top of my head? So if they expand into the actual drone segment and they actually are creative to delivering these type of growth rates, I think it's going to take probably, I think in about 3 years, I could target this gross profit margin to go up 15%. They can get a 20% gross profit margin, with potential to expand to 35%. But it's hard to see. It depends on how many contracts they can land with retrofitting drones. And actually, the key is for them to license out the actual tech to these drone companies to make it part of the drone product during manufacturing. Okay. So I think that's really the key. If they can develop these sensors and sell them out wholesale to these drone companies, they'll be in a real good spot. Let's talk about if this is a good investment or not. All right. And what do I think is going to happen with the stock? All right. Well, I think that with their cash burn, this company is disadvantaged. And with the warped balance sheet, I do not like how they're running the financials of the company as far as raising capital and so forth. I would rather this company issue out shares than actually, with this profile set up and their margins, I would rather see this company issue out shares rather than take on debt. What is the purpose of taking on debt if you can't service the debt? When you don't make any money, you don't have any free cash flows or so forth, all right? So a little bit skeptical there. Definitely not for me, guys, all right? So if you're getting value out of this, hit the subscribe button. Check out my Patreon. Get access to my deep dive collection. You're gonna find investor content on there that you won't find anywhere else. You get to see exactly what I'm doing, why I'm doing it, what I'm up to, what I'm researching, buy and sell alerts, more direct access to me. There's people on my Patreon becoming millionaires. There's a lot of exciting stuff happening on there right now. $15 a month, you really can't beat it. I tell you what, if you think it's too much, click this little button up here, pay annually and save 20%. Give it a shot, all right? What do you got to lose, all right? So as I digress, Aeva, all right? I think that this is a challenging space. If they get into the drone segment, maybe they can, let me see here. If they get into the actual drone total addressable market, and they can start taking share and growing at faster rates. Maybe you can add another 30% growth on top of all these growth rates if they execute properly. And expansion can, margin expansion can actually go up more dramatically than what I have pretty much otherwise stated. Okay. What do I think? I think that the stock is going to revert back down, especially with capital raises coming up. A lot of high risk execution stuff happening. You could probably get this stock right back down to 13, $15, in this range. And this thing is probably going to trade flat for a while with the actual combination of the balance sheet, executional S-curve phases, raising and diluted capital and cash burn to hit the equity. I think there's further opportunities to buy this stock, all right? Maybe that's not really what the Aeva shareholders wanted to hear or investors wanted to hear, but I'm always going to keep it real, guys. You're always going to get honesty out of me. All right, so with that being said, thank all of y'all for your support. I look forward to putting out more videos in the future. I love y'all, and take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland. And I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.
Remember how you felt when you were alone? Where's Beth? You were miserable. That's why we're here.
You're not gonna do it, are you? Change the world. You're afraid.